All right, we're ready to go.
Great, thank you, Karen. Good morning and welcome all. For the record, I'm Lisa Emerson. I am a Senior Health Insurance Programs Analyst for the Division of Financial Regulation, and I'm facilitating today's second Rules Advisory Committee meeting and discussion regarding DFR's proposed administrative rules for issuance of group health benefit plan to employer association. The rulemaking documents that we're going to discuss today, they were emailed to RAC members and also to interested parties on March 1st. In addition, all the documents related to today's discussion are posted on the division's website at the link that Karen put in the chat. So, in case members of the RAC division staff or interested parties don't have those available, you can go to the link on the division's website. And as far as keeping with the agenda, we can go ahead and jump right into some brief introductions. And what I would ask is we start with the RAC members, and to try to keep this organized, we'll go ahead and maybe just start off by going in alpha order with first names. And how about, and then of course, I'd also like the DFR and DOJ staff that have joined us today to also briefly introduce themselves. So how about we start with Antoinette with Cambia.
Good morning. My name is Antoinette Iwachi. I'm the Senior Regulatory Affairs Specialist with Cambia. Thanks for having this rulemaking advisory committee meeting to continue finalizing the AHP rules.
Thank you. And maybe I'll just go in order of what I have as a list, and then if I miss anybody, you can let me know. How about Bridget Quest?
Sorry, hi, Bridget Quest from Samaritan.
Thank you. And Dave Nessler-Cass?
Hi there, Dave Nessler-Cass with Moda Health and Delta Dental of Oregon.
Thank you. And Delmer Johnson? We're having trouble hearing you. You might be muted. We can come back to Del. I can see that you're here, so thank you. How about Gary Holiday?
Good morning, Lisa. Gary Holiday, Pacific Source Health Plans.
Thank you, Gary. And then Iris Tilley.
Iris Tilley with Baron Liebman.
Welcome. Jack Kim. Jeff Stone is not unfortunately able to join us. However, he is a member of the RAC and will be reviewing material and providing comment. Jennifer Baker. Okay, we might be missing Jennifer today. John Niedermeyer. Okay, Katie Brooks.
Good morning. This is Katie Brooks. I'm with the Ben Chamber, and it looks like guests are waiting to join in the lobby. I just got a notice on my screen.
Okay, thank you. I think Karen is managing that process. Thank you. Mark Strickland?
Yeah, Mark Strickland with Woodruff Sawyer.
Welcome. Mary Beth Gorino is unfortunately unable to join us today with Osberg, but again, she is a new member of the committee and will review materials and provide comment. How about Paloma Sparks?
Morning, Paloma Sparks with the Oregon Business and Industry.
Welcome. Rick Scahan?
Hi, Richard Scahan, Director of Benefits Team, Leonard Adams Insurance, Portland.
Welcome. Roger Rupp.
Yeah, good morning. Roger Rupp with RGA Resources.
Welcome. Sadie Elwood. Okay, we may be missing Sadie today. How about Stuart Harris?
Hi, it's Stuart Harris with the law firm Davis Wright Tremaine in Portland.
All right, welcome. Good morning. So, and again, reminder, if you're not speaking, if you could please mute your lines. We're getting a little bit of background noise. Thank you. All right, so we have a good group. Thank you all for being here today that could make it. Again, we have a great rounded out committee, and anyone who was unable to be here today will certainly have access to all the materials and have opportunity for additional comments as we move this rulemaking forward. Let's move on to is there anyone that I missed from the Rules Advisory Committee? Okay, let's go ahead and move on to the Division of Financial Regulation staff and our DOJ guests who were able to join us today. Let's go ahead and start with Rick Berry.
Good morning. This is Rick Berry, lead forms analyst with the division, and I also I review the product filings for associations, trusts, and discretionary groups for the division.
Thanks, Rick. And Tasha Sizemore.
Hi, everyone. My name is Tasha Sizemore. I'm the Life and Health Program Manager. My team is responsible for reviewing the forms and rates before the products go onto the market and the conduct of the products when they are on the market. Rick Berry reports to me, so we also get to have fun with associations.
Thanks, Tasha. And let's see, Trisha Goldsmith.
Hi, my name is Trisha Goldsmith, and I'm the manager of our consumer advocacy and outreach section.
Thanks, Trisha. And let's see, Pramila Reddy.
Hi, good morning. I'm Pramila Reddy from the Department of Justice. I work in the General Counsel Division in the Health and Human Services section.
Thanks for joining us. Sure. Anyone else from the division that I missed? Karen, would you like to introduce yourself?
I'll let Cassie go first.
Okay, great.
Great. Good morning, everyone. Cassie Soucy. I'm one of the senior policy advisors, and I help coordinate the rulemaking for the entire division with Karen.
Thanks for being here, Cassie.
And I am Karen Winkle. I am the rules coordinator, and I help facilitate the policy analysts with the rulemaking tasks.
It looks like Scott was able to join us. Scott Martin. We're just doing introduction, Scott. I see he's here, but we can't hear you, Scott, so there might be just some audio issues, but we know that you're here. So with that, welcome everyone. We have a great group today to help us talk through all this information. I'd like to start with some background. So this, rulemaking was started by a former colleague of ours, Michael Schaaf, and there was a Rules Advisory Committee meeting that was convened back in May of 2021. And essentially, what we're doing today is these draft rules are establishing standards for the issuance of group health benefit plans to employer associations in Oregon. The draft rules are intended to clarify the types of employer associations that are eligible to act as the policyholder of a group benefit plan under ORS 731.098, and the types of information that must be submitted to the division in accordance with ORS 743.524. The draft rules will help ensure that the issuance of group health insurance to an employer association is consistent with the requirements of the Federal Patient Protection and Affordable Care Act. And the department has authority to adopt these rules under ORS 731.244 and ORS 743.524. These draft rules have been developed in conjunction with informal vetting through several rounds of stakeholder meetings that were convened prior to convening an external rules advisory committee, many of which you are a part of and here today. Those folks met on May 14th, 2021, and again, we're meeting today, March 17th, 2022. The draft rules define the term employer association and also specify the items that a health insurance carrier must provide, again, to the division for approval prior to issuing group health benefit coverage to an employer association. The draft rule also requires carriers to notify DFR of any changes to the required information at least annually. And in the case of an existing employer association that isn't able to come into compliance by the first renewal following the effective date of the draft rule will allow for a transition plan for up to 3 years for the association to come into compliance with the requirements. So with that, that's just some background of the existing purpose and reason for the development of these rules. Here we are today to revisit the draft rules. And so with that, I would ask Karen to go ahead and display the copy of the draft rules, and we will walk through those and welcome any comments from RAC members for the, I will say, the edits to the initial draft of the rules. We've had some additional edits based on feedback we've received and also additional review internally. And again, if anyone has any questions before we start this process, feel free to flag that by raising your hand. Okay, let's make my screen a little bit bigger here. So looking at paragraph 1, there has been some edits to this number 1, and do any members of the RAC have any comments related to these changes? That being said, there's some of you sent some advanced comments if you'd like to comment on those. Again, if you don't have any immediate comments, you certainly will have an opportunity to provide written comment if you don't have anything you'd like to add today. Okay. And moving on to number 2, this same information as what was provided during the last RAC meeting process. And I have a hand up, Gary.
Hey, Lisa, just clarify, because I'm refreshing myself, under number 2, where it says, excuse me, the health benefit coverage to an employer association as the policyholder or other coverage under such a policy, whether issued in this or another state. Is that relating to the association it's created in this state or another state? Or is that the health policy itself? Because we're not.
You're kind of freezing, Gary. But I think I understand, what you're asking. And I'll ask, would anybody from the DFR's rule drafting team like to comment? Or we might need to get back to you on that, Gary.
That's fine. Yeah, it was just a clarification.
Okay.
So I want to make sure it wasn't that we didn't have to file, policies approved in another state with you guys also for an association.
Yeah, sorry.
Go ahead.
This is Rick Berry, DFR. My belief is it refers to the group, but it should still be an Oregon policy.
Yeah.
That's issued to the group. I think that part should be non-controversial, but I believe this piece refers to the group itself.
Yeah. Okay. Thanks.
Thank you. And I believe we may have another hand up. Let's take a look. Roger?
Yeah, thank you. So this is contemplating health insurance carriers. I know we've had situations where we have life insurance brought up. Is any of that being contemplated here for the life insurance side of it too? I know that's probably a fly in the ointment, but curious.
Thank you for the question. Again, I don't know the answer off the top of my head, but I'll ask the division staff to comment.
This is Tasha from the division, and I can let Rick correct me, but this does not apply to life insurance. The life insurance and annuities and miscellaneous health are handled separately.
Thank you. And Dave Nesser-Cass.
Thanks, Lisa and Tasha. So just to clarify, kind of on that theme of kind of the scope of this, so I'm seeing health benefit plan mentioned. So if I'm tracking right, a non-health benefit plan, so to kind of get even narrow about that, so like a dental only policy would not be included. Am I tracking that correctly?
That is correct, to my understanding, Rick.
My understanding as well. Health benefit plan only.
Thanks.
Okay, thank you for clarifying. Roger, do you still have a question? I see your hand is still up.
Well, I should probably take it down, but I guess I would ask the question, are those, so those rules are, there's a different set of rules that apply to dental and life insurance, and we could research those on our own. Is that what we're saying? Different path to take?
Yeah, I think you'd follow Oregon statute on that, which I believe the primary statute for associations and trust discretionary groups is 731-098 sub 2 and 3, and I operating from memory, but for life, I believe it's 743 like 524, something like that. Anyway, excuse me, 3354.
I'm just impressed you know that.
Kind of, yeah, well, repetition, and I think I still, I'm still close. But either way, yeah, I think you follow Oregon law for that, for non-health benefit plan products.
And we can certainly follow up offline with additional information to assist with that. All right, any other questions on the first and second paragraphs? Okay. Any questions or comments from the RAC regarding the removal of the 2A? Okay, and again, as we go through this, as I mentioned before, there will be an opportunity up until April 1st to take a closer look and submit any written comments. So we'll just keep walking on through this. How about, let's see, can you scroll down, please, Karen? Yeah, that's good. How about paragraph 3? Any comments or questions about that? The changes? Okay, and how about 3A? Can you scroll down a little further, Karen? Right, hearing none, let's move to 3, large A, capital A. Any comments or questions regarding the edits and changes here? All right. I see a hand. Stuart. You're muted, Stuart.
Yeah, sorry about that.
That's okay.
A couple questions. So in the so the language, notwithstanding any requirement, working owner is not allowed for purposes. So I guess it's the last sentence. For purposes of this rule, the term working owner means a sole proprietor. Means sole proprietors and other self-employed individuals who do not employ at least one common law employee. I was thinking of a situation. I mean, if I can think of a small business that does have an employee, or maybe even a couple of employees, but they terminate. I was just thinking, what's the window of period of time they need to satisfy that? Because given the current labor market, I could see a situation where someone who says, we fit this category of not being a working owner, but then I've got an employee or two that's left, and it's taking me a couple months to fill that position. Do they bounce out of that group right away? Is there a lag period? Is there like a 1 year look back test? I just wasn't sure how that worked out as a practical matter.
It's a very good question and a very reasonable nuance. Would anyone from the division be able to comment on that? Or do we need to take that back and discuss internally? Which we may need to do that.
So Roger, I know that this question, not Roger, sorry, Stuart. I know that this question has come up in the past in other areas with health insurance, specifically like with certain types of corporations in the small group market. And when we've asked insurers about this in the past, and I'd be happy to follow up with them in this case, that typically insurers do this at renewal and take a look at, what is actually going on at renewal, or that was what we were told a few years ago. Once again, I would want to check with all of our insurers on this. I can't foresee a situation where like that particular employer would like get bounced out automatically. But I will take that up with the insurers.
Thank you. I figured there was probably a practice there, but I wasn't sure what it was or if this was something intended to change that. Thanks.
Yeah, this is Rick Berry again. We do need to take that back, but I can say for qualifying for small group coverage, we have rule and statute, which I think are fairly well established. And my belief is we would follow those rules for this process as well. But yeah, I'm not sure. We'd have to get back to you.
Hey, Stuart, this is Gary Pacific. Are you looking at going both ways? If an employer is looking to gain an employee or is losing an employee? Is that what you're looking at? If it's going either way?
Oh, that's a good question. I guess I'd only thought about it in someone who was, who was traditionally or normally had employees but was small and so would fit in this category, and then for a period of time falls out. I hadn't really thought about it going both ways.
Yeah, sometimes we get it. The question is, how long does the employer have to hire another person so they can maintain the employer status? And like Tosh says, usually at renewal. Since this is generally going to be a larger group type association, no, I agree. Any clarification the DFR can put in that one would be helpful.
Got it. Yeah, we've noted that and we'll take a look at that. Good questions. All right, any question on or comment on, I think we're at 3B. There's a slight edit here. Okay. Any more comments on this page before we move to the next page? All right, we can go ahead and move to the next page. Oh, wait a minute, go ahead.
Hey, Lisa, on all these statements under the rule, are those going to be prescribed by the division like a traditional check sheet, or is the health plan going to have to draft its own statement?
There's, I think, some really good information on the next page that you'll see some details of what to include. All right, let's start with little E here at the top of the page. Do the RAC members have any comments or questions? Some rewording that's gone on. But still having to do with, you know, meeting the requirements of ERISA. Again, and if you think of any questions or comments, you know, after today, that's fine to follow up in writing with those comments and feedback. Moving on to large A, this is where we're providing more specific criteria for an association to qualify for a group health benefit coverage. Any questions or comments here? Okay, I see a hand up. Paloma.
Yeah, I'm just trying to understand like how narrowly we're interpreting this in terms of like, for example, for OBI, the process by which the employer association was formed was, you know, in 1940 or 1930 something. Businesses decided to form an association. So, I mean, is that what we're talking about? I don't know how narrow we're talking. Or are we talking specifically just about the healthcare side of the formation?
That is a good question. Division staff that assisted with the rules may or may not have an answer for you on that at this time, but do any of you care to comment before we pause and have to take that back? We're basically trying to provide a framework to work with so we can have some consistency. So Paloma, we may need to take that question back and follow up with you with more, or the RAC with more detail about that. But good question.
Okay.
Let's go to Roger.
I think my question's along the same lines as the last one. And so I'm looking at the different criteria there, and it just use the first one, how employer members are solicited. We're just talking about how the association at the high level, and I guess that's the clarification we're looking for, how they solicit their members. That's the way I understand it, but it would be good to get clarification.
Okay, thank you for that question. Stuart.
Again, just kind of a follow-on comment, I think, on small Roman numeral 5, the pre-existing relationships of the employer members. I wasn't sure exactly. I mean, maybe that just speaks for itself, but I was trying to think what kind of relationships were pertinent, or you know, what the rule was looking for.
Yeah, I think that's something that we'll need to follow up with you all on, unless, again, any of the DFR staff that, you know, we work together on this for criteria. It's just, again, trying to provide a framework so we're getting clear information for the evaluation purposes. So let us get back to you on that. I still have some hands up. I think, is that a second question, Paloma?
Yeah, just given the number of things we're gonna have to sort of circle back on, are we gonna schedule a second, another meeting for those things we're circling back on?
We certainly can do that. However, we'd like to try to keep moving these rules forward since they've been pending for a while. So if we can try to address that question satisfactorily in writing, we might try to do that as well, if that would be satisfactory.
I just think there's quite a few people who are interested in the same things and wanting to understand sort of globally how you're addressing these. So, I mean, at a minimum, I think it shouldn't be, it should either go out to the full RAC as an email, and there could
Oh,
maybe be
absolutely.
back and forth through the email. But I do think there will have to be like some ability for folks to ask additional questions after that's answered.
Sounds good. Thank you. Okay, I think it's Roger has his hand up.
Yes, I'm just doing a quick comparison to what was sent out last night or recently versus this that's up today. And I'm looking at the PDF that was sent out last night, and there's a subsection 3 that says eligibility criteria to participate group health benefit coverage sponsored by the association. So that's not in what you're showing us now. So I'm trying to reconcile the two.
Okay. Let's see.
I can throw it up if you need to.
Is it just one minor thing that's missing?
No, it's a whole new line. It's a whole additional line to what's there. To what was there last night in last night's edition. I don't know if it'll let me throw it up or not.
Sure. Go ahead and try to share your screen.
Wasn't it just comments last night, Lisa, that you sent out?
Yeah, I believe that it was only 3 emails that had Cambia's comments and then comments from Stuart and Iris. So I think that's what that was you were seeing a comment document with a proposed addition. So that's a comment document that you'll want to look at, Roger.
All right. Thank you. Sorry, I didn't pick
that's
that up.
okay. Apologies. No documents flying around here, so. Okay. You want to put the previous document back up, Karen, and then Iris?
Thank you. I was actually just going to clarify that I thought that perhaps my comments were what was confusing things. But just the one question I was hoping to clarify in section A is that earlier in the proposed draft, there's a reference to the concept of having a subsection of the association as the only employees who are eligible for the association plan. And it felt like section A was perhaps a little bit in conflict with that you could have, subsections with a particular industry that were eligible. And so I just wanted to get perhaps a little bit of clarity as we're working through this to square up those two sections. So just noting that to the group.
All right. Thank you for that comment, and we will probably need to add that to the additional discussion.
Thank you. I appreciate it.
Mm-hmm. All right. Shall we move on to the next section? If you want to scroll down, Karen. Let's go to the little g there, small g paragraph. Just ensuring that the small employers provide coverage substantially equal to the essential benefits adopted under ORS 731.097 at minimum actuarial value of at least 60%. Any questions on that? I see a hand. Kenneth first.
Hi, yeah, Kenneth at Pacific Source. So I guess my question is whether the intent here is to specify actuarial value per the AV calculator that the ACA uses, or whether actuarial judgment will be required.
That's a good question. DFR staff, do you have any comment that you can offer here?
Tasha, do you want to weigh in? My understanding is that it would be essentially similar to what you have in an ACA plan using the AV calculator. So coverage no less favorable than one might see in a ACA bronze plan.
Yeah, and Kenneth, I was going to follow up with that. I need one of my actuaries to help answer that question because there's probably an actuarial angle to that. So I don't know who Pacific Source is going to be working with on their who like you guys typically work with from the actuarial side, but I can put you in touch with somebody from my team to talk that out.
Yeah, I am the commercial pricing actuary at Pacific Source, so it would be me on the Pacific Source side. And it would make sense to use the AV calculator. That's definitely what I would endorse as well. And it sounds like that's what the DFR is thinking. So just to make sure that's clear in what's stated here, because I feel like where the previous comment was talking about is section 156 of Title 45, that kind of more directly referenced, the need to use the AV calculator because that is defined in the bronze plan there. Now that you've cut that out, it maybe left it open to more interpretation. That's all I'm pointing out.
Thanks.
Thank you. Any other questions here? Or comments? Okay, we can move down to subparagraph 5 here. This was just removed from here because it is placed further up in the rules on the previous page. So that's just been added to, if you scroll up, Karen, back to the first page, this was removed and, cut and then pasted right here. Oh, you went too far. Scroll back down. Right here on capital A. Any questions, comments related to that change? If you'd like to scroll back down. Okay.
So my one question as Paloma Sparks is that previously we defined working owner in this section and it's not defined in the new place where this appears. Do we need to do that?
It's certainly something we can consider. It's a good suggestion, and I think we'll need to, again, take that back, discuss it with the team internally. It says here, it says for the purposes working owner means. So I think that's an attempt to make a definition.
Okay, never mind then. I just think I missed that part.
That's okay. Thanks for raising the question. Okay, let's go on to, we just had a change in numbering there due to striking the number 5. So we have a new number 5, and then now number 6 has changes. Stuart, you have a comment.
And mine is just back on 5. Is there a materiality level of the change? So it's at least annually must inform the division of changes to the information required. And I was just wondering, I could think of some really picky changes that probably wouldn't merit, or is the anticipation that a filing will happen each year, whether there's a change or not, so that it would be picked up, or they only have to file if there's a material change?
I would ask again the rates and forms product regulation to comment, but I believe it's an annual process to catch any of those changes. Rick?
Yeah, Rick Berry. My understanding is that the groups would need to at least affirm that there's been no changes annually. So I'm not sure that, I think we're still working out the mechanics of what that confirmation looks like. I don't know that it would necessarily be a formal SURF filing, perhaps just a report, but I don't know that we've settled on the mechanics, other than I think we want an annual affirmation that there's been no change, and anticipating that if there is you know, a change. And I'm not sure if we would want to define a material change or, you know, or not, which is kind of, I think, what you're asking about. Yeah, I don't know, but I do think we're anticipating some kind of annual confirmation that there's been no change.
Thank you.
So Karen, if you scroll to the next page, that needs to finish that paragraph. Go ahead, Gary.
Yeah, right. So, and I think this is what he's getting to is, so you want a new Form 5500 or M1 filing each year? That's what, I think that's what we're kind of getting at, is what's material. It says,
Yeah,
we can
I
say
do.
there's nothing changed there, but under 3F, you need the most recent Form 5500. So we need to file that each year.
That would be sufficient, but I'm not sure I can speak for the agency on that point.
Okay, but I think that's what we were trying to get to, is we can get real nitty gritty on stuff, or is there real substantial materialistic changes that the division's looking for? So clarification on that.
Well, and you'll also see it's what the division may need upon request as well, you know, on a case-by-case basis. So you'll see that and as we finish out through the document. Annette or Antoinette?
Yeah, hi, Antoinette for Cambia Health. So I'm just thinking of this on a practical basis. So for number 5 is saying that we must file at least annually if there have been any changes to the information required in subsection 3. So again, are we just informing the DFR of that change and that's it? Or are we required to submit like the Form 5500 and everything else? I just want to make sure, like on a practical level, I'm following what's required there.
Well, Tasha may want to weigh in on this, but for me, I think we'd have to take that back because I don't know that it sounds like we'll need to be specific about what we expect, and I think we do intend to provide additional details. And you know, based on this feedback, I think that need is clear.
Yeah, and that's what I was going to say. One of the things that we have to kind of work on is additional filing guidance, and Rick mentioned potentially reporting. And so some of this may be given to insurers through that filing guidance. So we'll take this back.
Okay, thank you. And so you can see the additional language on this paragraph 6. So take a look at that. And while you're doing that, Gary.
Oh, I was going to piggyback on that one, Lisa, is that, you know, my concerns is if the change was made by association, the division doesn't approve it. This is all after the fact. You know, it's one of those, how much time do we have to work through correcting it or making adjustments? It's just one of those challenges. We may have to modify number 7 to include, you know, changes filed after the annual submission or something to that effect. So if the division finds something they don't want to approve of, then how to undo it or make more changes.
Mm-hmm.
That was it.
Thank you. And we do have information about a transition plan. If you know, if they're not meeting compliance, so does that factor in?
Yeah, but like I said, we may have to tweak that when we get there. I read that more of just the initial push out of this rule change as opposed to the ongoing annual filing.
Okay. All right. Thank you, Gary. Jennifer Baker.
Hi, thank you. Jennifer Baker with Providence Health Plan. And Tasha, when you mentioned we expect to provide additional guidance, I mean, so it would just be helpful to clarify, you know, what is in guidance and what is in rule, and so that the expectation is clear on what we have to require as opposed to what could be beneficial to a filing, or, you know, just make that clear.
Yeah, no, absolutely, Jen. And the plan is it would go into the transmittal document, which is similar to our product standards. So it gets kind of detailed into like you know, we require this information. So.
Great, thanks.
Any other questions on 6? And could you scroll up a little bit, Karen, so it can be more seen fully? Okay, there we go. Okay. Yeah. That's better. Start with Antoinette.
Yes, hi, Antoinette again from Cambia Health. So I also understand number 6. So the expectation is that for those AHPs that have been previously approved by the DFR, we are to resubmit them again and get approval by them by July 1st, 2023.
Let's see. Well, let's see, the effective date of the rule, the requirements become effective on July 1, 2023. But it goes on to say if an association cannot achieve compliance by the requirements of the rule that become effective July 1, 2023, then the carrier offering the coverage to the employer association may file a transition plan of how and when the compliance will be met. The division may allow the carrier to continue coverage pursuant to the terms of transition up to 3 years. Does that help clarify that there may be more time, but there is an annual update that's still required about each association that is approved to ensure they're still in compliance?
Somewhat when it comes to those associations that may not be able to achieve compliance by July 1st. I guess I'm just trying to understand what we are to do with our existing approved AHPs and by what date.
Tasha and or Rick, could you please weigh in here? It's back to the annual update. And if they need time to, we might need to provide some clarification on this.
So I think I heard the question, and apologies, I was dealing with a pet issue. I think I heard the question as like, what is the date those annual filings have to be made? Is that correct? Okay, so yeah. I think at this point, like what Rick and I have been discussing is the July 1st timeline, but we are also considering, you know, what the actual impact of that looks like in regards to the overlap with major medical plan stuff that is happening at the same time. So, you know, I guess if there's any comments from insurers about like what date that annual filing would be due by, we would be happy to take those as well. I don't know, Rick, if you have anything else to add.
I guess maybe I heard it more like if an existing group, if there's a concern that it won't be able to meet these requirements, when do we expect the filing of the transition plan to get in that 3-year runoff? Is it more of that nature?
Antoinette, is that?
I would like to hear that. Just sorry, if you could answer that.
Yeah,
I think it sounds like we need clarification at that point. I agree that this portion of the rule doesn't spell that out.
Yeah, and some of those administrative details, as you mentioned, would be in the transmittal guidance.
Yeah.
To insurers. Dave.
Can you hear me okay?
I can now, yes.
Okay. Yeah, so I think request on this for me is, so I like the idea, and I think there was a comment about this to make sure there's I'd like to see maybe a nearer term sort of end date for anything that's determined non-compliant. Certainly understand the need here to have some sort of a phase in of the rules and maybe a phase out for associations that are determined non-compliant. But the 3 years is a pretty long time overall. I mean, in my mind, I started thinking about maybe like 2024. In the 2023 plan year would be really difficult at this point, obviously, because we're, I mean, on the carrier side, and we're really in the middle of already building those plans, and there's a disruption there given kind of once these rules take effect, where we'll be in the process for that. But I know the 2024 plan year to me seemed like, and I think about kind of the way what we're doing with the legislature in terms of staging new mandates that have an impact like that. We've started to do that where we're kind of a year out. It's not the next year, but the year after. So that's a request. And then I think another request on this is sort of, I don't think it has to be in the rule. I'd like to see clarity about that kind of total amount of time for this sort of phase in, phase out process in the rule. The other details, which I think I hear others commenting on, and I'd like to, I don't think necessarily need to be in the rules, but I'd like to be clarity on is sort of, again, how this process works for the different scenarios. So if you have an approved association, what's this going to look like here? What additional information might DFR need? When would they ask for that to kind of go through this process? Because I'm assuming you're sort of evaluating. I think I'd recommend that each existing association be evaluated based on these rules. So sort of what information is needed as part of the initial review? When would that be provided? Again, that ties into kind of the overall timing for this sort of phase in and phase out. I don't think all that detail needs to be in the rule, but I think it'd be good for us to talk about it as part of this process so that we've given that feedback for whatever kind of filing. Tasha mentioned filing guidance, kind of maybe in that format, kind of could incorporate some of that into the guidance as it's written. So yeah, that's my comment at this point. Thank you.
Yeah, so this is Rick again.
Thank
So
you.
it sounds like there's a desire then, I don't know if it belongs in rule or not, but we should establish a date by which we expect a refiling, a compliance refiling for existing AHPs. So anyway.
Yeah, that makes
Thanks,
sense.
Rick.
Yeah.
I think administratively that makes sense. And I think that the rule itself is trying to build in some flexibility, some room to make these transitions. So, but more detail is needed in a separate guidance document. Gary.
Hey, Rick, so the intention is that all our existing association filings we're gonna have to resubmit under these new rules, correct? Rick?
Yes, sir. That is correct.
Okay, because I caution against shortening that 3-year period, because I don't know how long the division may take to review that. And if we shorten up too much, then we may get ourselves in a crunch.
Well, I think that, yeah, the 3-year piece isn't necessarily when they can be refiled. It's how long the transition period would be allowed to bring a group that can't comply with these rules into compliance. I think my understanding of what we're talking about now is the filing deadline once the rules, after that July date, when a refiling is expected for groups that even are assumed to be able to comply with these rules.
Right. So once these rules are finalized, then there's going to be the direction to refile all of our existing associations.
That's my understanding, yes.
And then we go on that clock, 30 days or 60 days, whatever it may be.
I don't want to speak for the rest of the division, but my belief is, yeah, the probably whatever time period we decide on for the clock for the transition run out for groups that can't meet the requirements, it would make sense to start the clock after a disposition has been made on the initial filing.
Yeah, and maybe that's what we have to work on with this particular subsection, because I agree with Dave a little bit that if you can shorten it up, but then again, if we shorten the time period, does it cause problems somewhere else? That's what I'm just thinking. Thanks.
And to just, from my understanding, the internal discussion didn't involve shortening the time period, wanting to allow flexibility for a transition for the carriers and the associations to come into compliance. So what I'm hearing is a request for a shorter time period, or I just want to be a little bit more clear on that.
Yes.
Okay, you want a shorter time period. Is that something though that carriers could initiate with their associations if they choose to, but then allow other carriers to have the greater span of time, 3 years? And let's go, I think we'll start with Kenneth.
Yeah, I just want to point out that the way the renewal cycle goes out, it's a rolling renewal cycle. So, you know, we realize that we want to make a change. It could be up to a year before that overall association's, you know, renewal takes place, where we do our rate setting for at the association level. Then employer members inside of that association might be renewing on a rolling basis. So it could be another year before an employer member actually has his contract changed, kind of getting attached to the association contract that's been negotiated as much as a year before. And then that association employer member who, you know, just got his, you know, plan renewed has that plan for a full year. And I think that's where that 3 years comes from, is that it could take a full 3 years for, under normal kind of renewal processes, for, you know, benefits or whatever else to kind of fully roll completely out of actual, you know, effectiveness. So I just want to caution folks about expecting changes within an association faster than those 3 years, because that then is going to require potentially re-rating associations or otherwise disrupting people's coverage.
Thank you for that description. Dave. I see your hand up. I don't know if you still have a comment.
I do. I wanted to follow up. So, yeah, I mean, I think I don't know if additional comments necessary. I'm kind of standing by what I'd said of looking for or having concern with that 3 years. So I'll just share, you know, sort of a business case example for us. So we have both associations that are approved to offer coverage in the market, and we have others that we've attempted to obtain approval for and have not been approved. So we've seen this kind of a inequity in the market based on what we see as kind of inconsistent application of, I mean, not so much essentially kind of an unwritten form of these rules that we're seeing being applied into associations as they're filed and have been now for several years, versus those that were approved sort of prior to this kind of period of the last few years. So the overall period here, where we've been in this kind of a market environment where we're seeing inconsistent application of the rules, has already been going on for, I think, at least 3 years. So to get these rules finalized and then to have another 3-year period after a determination, which might not happen until 2023, you're talking about, I mean, over 6-year period, I think, if you count it all, where we've had essentially kind of an unequal environment based on sort of when an association was you know, filed or reviewed and the determination made. So that's sort of just to give to put some color, I guess, to the commentary in terms of my concern. It's a larger concern about the overall amount of time where we've been in kind of an unclear regulatory environment with AHPs in Oregon. So thank you for that opportunity to comment.
Thank you, Dave. Annette, or Antoinette, I'm sorry, Antoinette.
Okay.
I want to say Annette.
I know people don't even touch the last name, so that's okay. You're doing great with the first name.
All right.
Antoinette again from Cambia Health, and we totally agree with what Dave from MODA just said. We believe most changes can really be put in place within 18 to 24 months. And the 3 years is just too long. We would like to see the same rules apply to each, to everybody, to each group. So we would really encourage the 3 years to be shortened.
Thank you for that reminder, because I believe that is in your written comments as well. Okay, other hands. Dave and Gary, do you still have comment? Your hands are still up.
I
Start with
left
Dave.
mine up. I'm taking mine down. Sorry.
That's okay. I'm watching the hands. I gotta keep track of everything here. Gary?
Yeah, Lisa, just to piggyback on Dave and Edward, it's the rule allows, as part of your transition plan, the division can shorten those time periods up depending on what changes can be made. The rule just says the division may allow a carrier to continue for up to 3 years. So I think there's some control there by the division where they want to make a shorter time period, they could. The 3 years, like Ken Bichelle was saying earlier, it's for those unique circumstances that may require, some extent of changes by the association. So I offer that out there as a comment.
Appreciate that comment as well. Jennifer?
I'm going to back Gary up on this one and say, let's give the flexibility to the DFR and keep that in there.
Thank you, Jen. Anyone else? Okay. Jen, your hand's still up. Do you have any other additional on this? Are you good?
Nope,
okay.
Sorry.
That's all right. Thank you. All right, scrolling down, we are just at 8. That there's a strike through on that to remove this paragraph 8. Any questions or comments about that? It was redundant to the other paragraphs above, as I recall. All right. And again, we have some things to circle back with the RAC on to seek clarity on some of the questions. And you also, I will put a time period on this for additional written comments as April 1st, 2022. That's a Friday. Hopefully that gives you some time, as we'll give time to others, interested parties and other stakeholders to provide comment. Another topic I want to put out there to you is it came to our attention that by implementing the new rules, the new rule around association health plan rule, it is duplicative with an existing rule, OAR 836-053-0070, regarding multiple employer work arrangements, welfare arrangements. So, you can comment now if you have thoughts, or we would appreciate comment on whether or not this should be repealed, because it appears duplicative to what will be the new rule for the association health plan. So you feel free to take some time with that, but I would request that you provide any, again, written comment about this by Friday, April 1st, 2022. Just an administrative cleanup that we think we should take a look at. Any additional questions or comments on this or the previous draft rule before we move on? We're getting close to a time where we'll need to make some time for public comment, but I want to first make sure that I talk to the RAC about helping us with questions regarding the statement of need and fiscal impact questions. Again, not to put you on the spot here today, but if you have any information you want to share, we welcome it. But okay, before I get to that, I do see a hand up. Antoinette?
Yeah, just a quick question. So I see that the draft rules mentions a form. Is this intended to replace the existing transmittal, or how is that going to work with the existing transmittal that we submit with our AHP filings?
I would like to see if Rick could weigh in on that, or maybe Tasha.
Yeah, I'll take it. I don't see Rick
Okay.
popping up. So we are gonna, Rick and I are gonna have to make updates to the transmittal, and the plan is to kind of listen today to hear what the feedback is, hear what needs to go into the transmittal to make sure that the insurers are, you know, have a complete filing or report or however, you know, whatever option we go through, go with. And so we will have to update that transmittal, kind of based on that feedback. Rick, is there anything you'd add?
I suspect that this process is going to lead to a separate transmittal for groups seeking approval under this process. And then there'll be a separate transmittal for other association trusts and discretionary groups, I think.
And could I recommend that?
Or other product types, I'm sorry.
Can I recommend that you share the updated transmittal to insurers for feedback as well?
Yeah, I think that's reasonable.
Thank you.
Welcome.
Okay. So yeah, before we move to opening it up for public comment, I wanted to again circle back to the sniffy document, we call it, and DFR is seeking feedback from the RAC, interested parties, and stakeholders in general regarding how adoption of these rules will affect equity in the state. As of January 1st, 2022, all of our rulemakings need to include an equity statement. And so we are seeking your input or that of your, your close working colleagues in your circle to help us inform this question. So the question is, who is this going to impact and how might it impact one group of people differently than others? That would include the Black, Indigenous, people of color, BIPOC community, small business, professions, occupations, geographic location, recreational interests, aging older adults, individuals with disabilities, the LGBTQ plus community, religious communities, and veterans. So if you could take some time to think about that, and we'd appreciate comments on that included with the April 1st, 2022 timeline. In addition, so if anybody does have any immediate thoughts or comments they'd like to share regarding that question, those are welcome. Roger.
So are we just saying how this will benefit, how this law benefits the community? And that's the basis of our response?
Yes, how the law, basically the statement is how adoption of these rules will affect equity in the state. Who is this going to impact and how might it impact one group of people differently than others, or is it, not an issue? So you're, yes, responding to how will it impact the communities in Oregon.
So for instance, if I say association health plans are a more affordable way for all businesses, all communities, all citizens of Oregon, is that a fair statement or a way to respond?
Yes, we welcome that comment.
Okay.
Thank you. And anybody else have any comments or questions? Cassie, is there anything you'd like to add?
I'll just add some context around this statement. It's really looking at how it would potentially, these rules, not necessarily like the statute behind these rules, but how these rules will be implemented will potentially yeah, like Lisa was saying, impact one group over another. Any information you can provide to us about kind of your expertise, and if you've got any subject matter experts who understand kind of diversity, equity, and inclusion, especially as it relates to association health plans, we welcome that information to help with our analysis. So what we'll do is we'll take in kind of the comments and the feedback and then put that into a statement in addition to our own research into kind of the equity issues around this.
Thanks, Cassie. And then also the question of, Roger, is your hand still up or you have another comment? Okay.
Sorry, I took it down.
Okay, thanks. And also any information you can offer regarding any fiscal and economic impacts adoption of this rule may affect. And then it has all the details listed in the SNFI document. All this information that if you could weigh in, it would help inform our response on this document. Okay, and it's 10:45, and so I would like to take a moment to open it up to the public for any or interested parties that have had an opportunity to make any comments. If they have any verbal comments they'd like to share, and of course they are also welcome to submit written comments, which are, even if they do share verbal comments, we would appreciate a follow-up and written comment by April 1st, 2022. Is there anybody that has signed up to comment, Karen? Or is there anybody that would like to raise their hand?
I do not see anybody.
Okay. Well, hearing none, all this, again, all this information is posted on the rulemaking website. All of you are informed. You've got the opportunity for submitting written comments by Friday, April 1st, 2022. As far as next steps, we will take all the information that we've received today, comments, questions that need some follow-up, and discuss internally and circle back on some of the key flags that were offered today to try to maybe address those issues through correspondence with the RAC. But if we do find that another meeting is needed to discuss any seriously outstanding question, we certainly can do that. And I have not set another meeting time for a third RAC meeting, so I will need to get back to you all about that after looking at calendars. And also, I think we'll want to at least wait to receive what we received through the comment period of April 1st, 2022, Friday. Does anybody have any additional questions, or anybody from DFR have any, final comments they would like to make? Thanks for putting that up, Karen.
Yes, you can send comments to, actually it'd be really good to send them to both Lisa and myself. And then here is our email addresses.
Great, thank you, Karen. And just thank you everyone for, reconvening with us, and for all your time, reading all of our emails and materials, and I really appreciate your participation, and hope you have a great rest of your day, and I will be in touch.
Thank you.
Thank you.
Thank you.
Thanks. Bye.